Abby?
Welcome back.
Yeah.
Thank you. You did like this, Abby?
Yes, sir.
Sano, now what are you doing?
Right?
Okay.
So
Yes. Incidental cost to sell. Okay.
Costs
Costing this million now.
of acquisition. And we said for this, it will be A over A plus B times C, right? So in the context of this class, your A is the cost of the asset, right?
Yes.
So what's the cost of the asset?
The cost.
5 million.
5 million.
Sir, please,
Sorry.
sir, is the cost the proceeds?
No, sorry.
No.
A is sales proceeds,
No.
sorry.
Yes, sir.
A is the sales proceeds of the portion disposed, right? So you have
Yes.
what?
Yes.
3.5
million.
That is 3.5.
Sorry, let me put on my light. 3.5 million, Abby?
Yeah.
Over 3.5 million plus the portion not disposed.
4.3 million.
4.3 million. Then multiplied by the entire cost of the assets.
By 5 million.
That's 4.3 million.
5 million.
No, sorry, 5 million.
Yes, sir.
Multiplied by 5 million, not 4.3.
Yes. Thank you. My stepmother want to follow me to this class. So we have 7, 8, Abby.
I think I saw your stepmother for this matter.
Times 5,000. Like this, Abby?
Yes, sir.
So it means you have capital gain will be 3,250 minus 2,243. So capital gain tax.
It's 10%. 101.
All right. Do you understand?
Yes.
Any question? Any question? Now we are computing for the second asset. The company sold an acre of land which was acquired. So computation of capital gain tax. Or what? Oh. It was also sold in 2019, Abby. For 2019. By the way.
Okay, subsequently disposed. No.
2018.
2018.
No.
Okay, it was acquired 2018, but it was sold.
Subsequently disposed for 18 million in 2019.
No, this is another thing. The beginning said it was acquired 2018, May 22nd, at a cost of this.
At the cost of this for on 2018, sorry. So it should be 2018.
Yes. October 19th.
2018, sorry. Good. So we have 6 proceeds. How much is 6 proceeds?
12.5.
Right? Is there an incidental cost to sell?
No.
So since there are no incidental costs to sell, what we have is what? Cost of acquisition.
Cost of acquisition, yes, 6.6,750,000.
Can you hear me? Is there incidental cost for cost of acquisition? And how do we know in the question? Different from the incidental cost to sell.
If you have something like agency fee, cost of improvement of the assets, any other cost whatsoever that is relating to improving the asset or making it available for sale, those are the costs that will be added. They may not say incidental cost, basically.
Is that's for cost of that's for incidental cost to sales. Can we have incidental cost to acquisition too? And how do we
Yes, yes.
differentiate?
So if you have it, you can have legal fees to acquire, professional fees to acquire.
Will it be stated like that?
It will be stated
Because
expressly.
some ICAC can just say legal fee or professional fee and they will be silent about it.
Either
You won't
ways, if you
know
have
if
it will have the same effect.
so we can
It,
use it for both incidental to sales and for cost acquisition.
that's what I'm saying. I'm not saying you should treat it twice, but it will have the same effect. It won't. If you treat it, your capital gains will not be different. Either you deduct it from the sales proceeds or you add it to your cost of acquisition, your capital gains will be indifferent. And ultimately, it will not affect your capital gain tax. Do you understand?
Hello, sir.
Yes.
How do you arrive at that's 100.64? The first
10%
capital
of
gain that becomes.
1006.41.
Okay, oh, thanks so much.
You're welcome. Do you understand? So capital gain, how much is it?
5,750,000.
All right.
That's 6, 7.
But we're told that they now bought another land, Abby,
Yes.
for
Yeah.
50 million. So we have rollover relief. And that's lower of
Lower of sales proceeds and acquisition.
And
this proceeds,
reinvested. Sales proceeds and
Sales
invested.
amount
proceeds is
invested.
12.5 million. Amount reinvested is 15 million. So we'll take sales proceeds.
Yeah.
Less cost of acquisition.
Yeah. Right? Any question, please? Any question, please? Now, they now said that the asset was subsequently disposed for 18 million, right?
Yeah.
Yes.
So we say computation of capital gain tax again.
Mm. Don't see something.
Right?
Yes. So this one is BII. It's not C. We have not entered C.
Okay. So you now have, sorry, thank you. Sales process, how much was it sold for?
18 million.
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 What was the cost of the assets?
15 million.
50 million. Abi?
Yes.
But did he enjoy rollover relief at the time he was investing?
Yes.
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 So deduct the rollover relief he enjoyed.
Okay.
How much was the rollover relief he enjoyed? 5,750.
50 million.
Do you understand it? So it's the net of the
Yes.
two that will now be the cost of the assets. Then you now have capital gain. Minus 9,250. Capital gain tax.
Just because government must collect their money. That's
Exactly.
the only.
They must.
So why did
Sorry,
they give the rollover
I was
relief before?
lost
They
to
know
net
that they are
swap.
waiting
Which
for
one are we solving?
in front.
Sir?
Which one are we solving? I was lost to net swap. This
We are still
B
solving the
part, which
question.
one?
We were only trying to treat this portion highlighted. They said subsequently disposed for 18 million. So when an asset that has enjoyed rollover relief is subsequently disposed, you have to then compute capital gain tax on the disposed asset, right? And then you deduct the rollover relief from the cost of the asset. Do you understand?
This one is different from that the other one. Is it not disposal that we calculated in the former one that we say there was no gap capital gain? That we
Exactly.
have new capital gain.
But the asset
And
was
which one
then
is
disposed for 18 million. That same asset that didn't have capital gain was later disposed for 18 million. So then the law provides that where the assets disposed enjoy the rollover relief, the rollover relief should be deducted from the cost of assets before determining the capital gain tax.
Okay.
Do you understand? So, the amount that they used to buy this asset of 18 million was 15 million they got as sales proceeds. 12.5 million was part of it, right? So they've enjoyed the rollover relief of 5,750 before investing in that asset. So that amount that was invested should be deducted from the cost of the asset. So it means the amount he was bringing to the table was actually 9,250 and not 15 million because he enjoyed a portion of 5,750 before that we didn't compute tax on. Do you understand?
I'm sorry, I'm still kind of just take that one again, please.
Okay, what I was
Mention
saying.
the law that say where an asset is firstly disposal.
Okay, when an asset disposed is acquired by enjoying a rollover relief. When you want to determine the capital gain tax, you have to take into consideration the rollover relief and deduct that from the cost of the asset before determining your capital gain tax. Do you understand?
Okay.
So invariably, this asset now is 15 million. The amount you invested is 15 million, right? But out of this 15 million, he sold an asset of 12.5 million and he was supposed to pay capital gain tax on that portion. But we didn't allow him pay the capital gain tax because he invested in a new class of asset. So when he's disposing that asset, he has to go and add back the rollover relief we have to deduct the rollover relief he enjoyed from the cost of the asset before determining the capital gain tax.
Sorry, I have a
Okay.
question.
So if I can get it clearly now, that means that when he purchased the asset, he reinvested that same asset when he disposed it at 2018.
Yes,
So
he
that
invested
same
it
asset
at
was
2018.
later, yes, well, that same asset was later disposed again.
Yes.
I mean, the asset that was reinvested was later disposed again.
Yes,
Is that
yes.
what you mean?
Yes, yes, yes.
Okay.
That's what the person says.
Sorry?
That's what the question
No, I
says.
said that's what the person says. Yes.
Subsequently disposed. The highlighted
Okay, in 2019.
Sorry, I want to
Okay.
confirm something you said.
Please confirm, sir.
Sorry. You said a new class of assets. I thought rollover relief is only on like the asset on the same class.
So let's say new type of asset, I mean to say, not new class, new type.
Okay.
Because for
Okay.
you to enjoy rollover relief, it has to be for the same purpose and the same
Yeah,
class
the
of
same class.
assets.
Yeah, I just wanted to confirm. Thank you.
Yes. I mean to say new type of asset. Probably you are selling Peugeot to buy Ford. They have to be within the same class, but it can be different type. Do you understand?
Okay, sorry, one last question, if I may ask. This sales proceeds was gotten from the subsequent, the one you just highlighted. What about the cost of the asset? Are we still using the historical cost of asset that was purchased for the first asset that was later reinvested? Or which cost of asset are you using?
We are going to be using the asset now. The cost of the asset will be the amount he bought the asset newly. Do you understand?
Okay, not the previous one that was
No,
bought for the first asset.
we've computed capital gain tax on the previous one.
Okay, now I
So
get.
all things have passed away for that one. So the new asset
Okay.
that he bought now, so the purchase price becomes the new cost of the asset disposed.
Oh, wow. Okay. Noted.
Hello, sir.
Hello, sir.
The less cost of acquisition, that's 6,750,000. How do
Yes.
is it the question? I've checked the question, I couldn't see it there.
Yes, this is it. Am I lighting it yellow?
Okay, sir. Okay. It was okay. It was an omission. Sorry about that.
No problem, no problem. So with this, we've answered the B part. So the C part of the industrial building where the production unit is located was damaged on October 20 during a protest by some youths in the area. The company in November 2020 received 2.2 million as compensation under the policy of insurance. The company has intention of utilizing the fund for acquisition of another building, Abi. And we've said in this class that where an asset is disposed and you get where an asset is damaged and there's compensation from the insurance company, the amount received as compensation from the insurance company shall be deemed to be the sales proceeds of the asset. Unfortunately, we cannot compute capital gain tax on this because we don't know the cost of the asset initially.
Acquisition.
Yes, and we
Yes.
don't know the amount that was invested, so we can't really compute the capital gain tax. But with this, I've answered the C part. The tax implication on the compensation under insurance policy received on the damaged industrial plant.
Sorry, sir, I have a question, sir.
Yeah, please go ahead.
Concerning this insurance claim.
Yes.
If an asset is being damaged,
yes,
and the insurance company decide to pay a kind of claim of the asset to the company or entity, does that mean that, based on your explanation, such claim, such a claim from insurance company will serve as a sales proceed?
Exactly.
But before we can calculate anything like capital gain tax, there must be cost of such asset, right?
Yeah, exactly. Because capital gain
cost
tax
of acquiring the asset.
Yes, because capital gain tax is sales proceeds less cost of acquisition.
It's okay.
Yeah.
Thank you.
You're welcome. But what the examiner is just expecting you to state clearly is that the amount received under insurance claim, under insurance or indemnity shall be deemed to be the sales proceeds of the asset. Do you understand?
It's okay.
So the
Sir,
thought,
please, before we move, sir, please, before we move forward, I want to ask a question on that.
okay.
So assume, yeah, I think those costs that are exempted from this incidental cost is insurance premium. Okay.
Yeah, insurance premium is different from insurance claim. Insurance premium is your monthly donation. Oh, sorry, I said monthly donation, monthly contribution to the insurance company. Insurance
So
claim
is
is
it
what
the
you
new
receive
act?
after the asset is damaged.
Yes, and it is money that they receive after the damage of the asset. But
Yes.
now, is it the new finance act that said that we should now be using it as sales proceeds?
I can't hear you.
Please, can others mute their distance? It's getting rowdy.
Can you hear me now?
I can hear you now, please.
I said now that I think it's the finance act that said we should, anytime the insurance give us a claim for our damage, item that are damaged, that we should now be using it as a cost of acquisition, sales proceeds rather.
Yes.
So if they give us the cost of the asset here, we are going to net it from it and get our capital gain.
Exactly. Like we did in our first class. Our first class on capital gain tax. Oh, you were not there. Oh, sorry.
Yes, sir.
We've treated something around insurance claim in this class before. You can just revert to the video.
So I've tried to check those videos, but I don't think I'm getting any, except from those one on the YouTube.
Then check I didn't get you.
I was able to get some of your videos on YouTube, but I don't get
all the classes we've done here on YouTube. If you go back on YouTube, you will see it. And it's also in the folder.
Please, how can I get it?
The YouTube link?
Can you possibly send the folder? Yes, the folder for all the videos.
Okay,
I can't get that capital gain on the YouTube.
Please, so that I can watch all the other videos. Please.
Okay, I will reshare them in the class. Don't worry.
Thank you very much, sir.
You're welcome. Can we go ahead, please?
Yes, sir.
Yes, sir.
So let's go to C part, the D part. So with this, we've treated all the issues relating to the asset, Abi. So the D part is now saying that we talk about the treatment of gains arising from business reorganization in line with the provisions of Section 49 of Finance Act, which amended Section 32. Actually, the provision of the Act is that beginning from 2020 year of assessment, Finance Act 2019 became applicable in 2020 year of assessment, right?
Yes.
So what the Act is only saying is that any gains that actually arises between connected persons, especially in the case of business reorganization, that kind of transaction will be particularly exempted from capital gain tax.
Please come again.
Okay. So beginning from 2020 year of assessment, any asset that is transferred as a result of business reorganization, right, will be treated to be transactions that arises between connected persons. And as such, that asset will be exempted from capital gain tax. But such exemption will be subjected to the minimum holding test. Now, what is the minimum holding test? The minimum holding test is only saying that before you can transfer such assets, you must have used it for not less than 365 days. That's a year. Do you understand?
Yes, sir.
So that's just what the minimum holding test is talking about. That before you can say you can transfer an asset, you have to hold that asset for not less than 365 days in a year. And also, the company that you are transferring to, for a company to be treated as related party or connected person, there must be a relationship that have subsist also for not less than 365 days. Do you understand that now?
Yes, sir.
Okay,
Yes,
any
sir.
question?
Sir, the C parts,
Yes.
I, I didn't get that solution very well, sir.
So I was saying that for the C part, the implication, the examiner only wants you to say that because the transaction is arising from insurance received, the insurance claim shall be deemed to be the sales proceeds of the asset.
Okay, sir. Okay, sir. Thank
And
you, sir.
Again.
such will then be used in determining the capital gain tax.
Gain tax, that's
So
Please, can you
if the
take that
amount
again?
is if the amount is reinvested, then the rollover relief applies. But if it is not reinvested, sorry, the rollover relief will not apply.
Can you take that again? The transactions so that we can write it.
Which one should I take again? The C or D? C or D? C. Tax implication.
Hello, can you hear me?
Yes, I can hear you. I was asking that which one should I take again?
Oh, sorry. It was someone that was calling my line, Jare.
Okay.
The aspect of you mentioned one statement like that when the transactions arises or something like that. I want
Okay.
to just
Okay, no problem. Under insurance policy. I will dictate it now and type it at the same time. So where there is
jeez.
a claim under insurance contract or contract of indemnity, such claim shall be deemed to be the what? Sales proceeds of the asset. The sales proceeds shall then be subjected to capital gain tax after deducting the cost of acquisition and other allowable expenses. Where there is reinvestment, right? The amount reinvested shall be subject to rollover relief. Does it make sense to you?
Sorry, I'm trying to zoom my phone. where you wrote such claims shall be deemed to, can you just throw?
Okay. So let's move on.
Hold on, no. So, excuse me, can you just throw back, please?
All right. Are we on the same page, please?
Yes, sir.
Are we good to go? Are we good to go on capital gain tax now?
Good to
Yes, sir.
go. Good to go, sir.
I just sir.
All right, good. But have I treated options with you?
Options.
Yeah, options in the capital gain tax.
No, sir.
But
Okay.
before we go finally, sir,
Yes.
hello, sir.
Hello, I can hear you. Yes, please go ahead.
Sir, as regards the rollover, rollover relief
Yes.
and amount reinvested, yes, sir. If the amount reinvested is lesser than sorry, is lower than the sales value, are we still going to subject it to the same treatment as we treated it here?
If the amount reinvested is lower,
Yes, sir.
yes, you will put the same treatment. But what will now happen in that extent is partial
Oh,
relief. So if you
okay,
let's assume that the
okay,
amount invested is 10 million, you use 10 million here. So you have what you have here will definitely
yes,
be lower than the amount you got here in the first place. So it will then be partial relief.
yes, okay,
So, are you saying that whenever we have, after we've selected the lower between sales proceed and amount reinvested,
Yes.
and we now have like something like 5 million, which is less than the cost of acquisition, is that what you're talking about?
No, what I'm saying here is, let's say for instance, what you have here is 10 million.
Uh-huh.
So here you have 10 million instead of 12.5. So what you have here will be something lower than 5,750. So you have capital gain.
okay. Instead of
I thought we
this
get
one has nailed this one now, it won't nail it.
Yes. So you have capital gain.
Okay,
So that's when we now say there's
okay,
partial relief.
okay. All right. I think you have mentioned something like that in the globe before. Thank you, sir.
Yes.
partial
Okay,
relief.
thank you.
Sorry, I want to confirm something.
Yes.
If you're having like a negative figure for your amount you invested and your sales proceed, is it possible for you to have a new rollover relief?
You have negative figure.
Yeah. Is it possible for you to have new rollover relief?
To have no relief, Abi?
Like new, yeah.
Yes, but it's possible to have no relief. If you don't invest in a similar kind of asset or in the same class of assets, it's actually going to be nil.
Okay, thank you.
You're welcome.
So this one now you just did this full rollover relief.
Exactly.
All right.
Where are we? Any question? Okay. So I wanted to, who can remind me the year that Incoa is? That we saw that in Kowa before in this class now. You can remind me the die they tested at Adinkowa. That same die they tested capital gain tax, and what was tested was options.
Yeah, still checking, sir.
Eh? Yeah. Just let me pick Dadinkowa. Once you pick Dadinkowa, I'm sure that same die they tested. We've done Dadinkowa in this class. Okay, May 2022. May 2022. Good.
Yes, May 2022. Dadinkowa.
Yeah. We've solved that question already in this class, so although there was a mistake in
CIT.
very simple.
How?
Confirm anytime you can see my screen that you can. I just want to treat the option part. So that I will know that at least with this, I'm through with it. You know, Finance Act 2020 provides that options will now.
Yes, we can see your screen now.
What's it?
We can see your screen now, sir.
We can see your screen now, sir.
Okay. Thank you.
I'm asking, are we treating SFF? This one that we still have options.
Hey, there, you see these options. It's like a weapon that has been fashioned against us in profession.
No. You have it in CR, you have it in SFF, you have it in tax, Abi. But it's actually a small thing. A small thing here. It's very small. Don't let anything cajole you. By the time we do it now, you'll be like, is this what I'm saying? But when you're mentioning topics, the way you mention it, options, clinical, it's very small. But just that what you don't know, you don't know. That's just the issue.
Exactly. Because this is my first time of hearing the options under capital gain tax.
Yeah.
Never knew something like this is under options.
There's an option under capital gain tax. So now under capital gain tax, I'm not going to treat everything in this question. I'm only going to treat number 1 and number 2. Number 1 is talking about options, and number 2 is talking about exchange of assets with debt. Yeah, exchange of assets with debt instrument. That's number 1 and number 2. But number 3 is I should treat number 3 too, because I should treat number 3, but I'm not treating number 4.
So you treat number 4 too, I beg. No vex. Just treat the question.
So let's be fast. Let's be fast about it. So let's go ahead.
Yeah.
Somebody please read.
Can we just read the thing?
Start from that nice one. Start from the nice one.
Okay, nice one, Nigeria Limited, a manufacturing concern with head office in Calabar and branches in Ikeja, Kano, and Abuja, has been in business for several years, reporting its accounts to December 31st of every year. The extracts from the book of accounts of the company during the year ended December 31st, 2021 reveal the following transactions. 1. Disposal of an option. On February 1, 2021, the company sold an option on a piece of land in Ikeja for the sum of 8.5 million naira to Echo Rahim Limited, which subsequently exercised the right by purchasing the land for 32,200,000.
I'm sure everybody in this class, okay, don't let me say everybody, but you know what option simply means? Option simply means that's IFRS 15 revenue. Option simply means that you are selling the asset and then you are withholding the right to buy it back. Right?
Ha, this one off me.
Do you understand?
No, sir.
What of you there now?
I've told you I don't understand now.
Okay. What option simply means here is that I have my phone. I am selling, okay, let me use football team for instance, Real Madrid. You've heard of the term the loan player. How many of us are football fan here?
Yes,
yeah. When the loan player, the idea of loaning play, okay, not loan player now. You have heard of buyback clause for footballers. Where
yes, sir. Yes, sir. Yes, sir.
Where they input the, I think
Yes,
which
sir.
footballer did they do it for that time? Oh, hey, I can't remember very well. I think Balotelli, I'm not sure. But I know of a player who had a buyback clause. And in fact, if the team are so mean, they will tell you that that player must not play against them when you meet at Champions League as part of the clause, where those players have a buyback clause. So that option, that is actually an example of option. So A is selling to B, and then inserting a clause that B can sell back to A where A needs the asset. Do you understand?
Yes, sir. Yes, sir.
Now,
yes, sir.
what Finance Act 2020 provides is that irrespective of whether you exercise the buyback clause or not, the amount you sold it, when you sold it, should still be subjected to capital gain tax. Do you understand?
Take that again, please.
Should I take that again?
Yes, please. Take it again.
Finance Act 2020 provides that when you sell an asset and the asset is under option, the sales proceeds you are selling it should still be subjected to capital gain tax.
The sales proceed.
Yes.
Again, sorry.
Where you sell an asset with a buyback option, with an option, such assets, the sales proceeds should be subjected to capital gain tax.
By the time you solve it, you understand better, sir, so that we can move fast.
The sales proceeds is 8.5 million, Abi?
Yeah.
So
yes,
you now do capital gain tax on that 8.5 million.
Directly.
Yeah, exactly.
Now, what you for do since now you speak grammar and we are lost.
I better read this man.
Any question? Any question?
That's all.
Please,
Is that
what we are treating?
What is it?
The question is which year?
May 2022, question 1.
Okay, sir.
Sorry, I have a question.
Question 3.
Yes, please.
For every option question, is it that they will not give us the cost of acquisition? Like it's just only the sales process they're going to give us. So we're going to apply.
Yeah, most of the
10%
time, most of the time, they should not give you the cost of acquisition.
All right.
But when they
I
give you the
beg
cost
they
of
should not.
acquisition, when they give you the cost of acquisition, then you'll be asked to you should determine the capital gains. Then after determining the capital gains, you then determine the capital gain tax. Do you understand? Okay, good. The second one, acquisition of assets. Are we together, please?
Very, very,
Yes,
sir.
yes.
So with this, we are done with the first
Sorry,
one.
sir, we are not on the same page, yo.
Which
What
page are
about
you?
that 32.2 M?
Ignore.
Okay.
Now, we were told that so we have on March 15, 2021, one of the company's debtors in Calabar, Mr. Babati, reached an agreement with the company by exchanging his piece of land, which was valued at 15 million, for the debt at 13.5 million. The company on May 2021 disposed of the land for 18 million, right? The incidental cost incurred towards disposal of land is 250,000. Ladies and gentlemen, in this question, you ignore the value of the property and you select the value of the asset in exchange or the debt in exchange as the cost of acquisition. Do you understand?
Yes, sir.
Please
So
come again, sir.
you have
Yeah.
the cost.
Maybe you just solve.
You have the cost of assets. How much is the cost of assets?
13,500.
No, sorry, sales proceeds, I mean.
18 million.
When I'm writing cost of assets, you should have said no. Sales proceeds.
Sales proceed, 18 million.
18 million, Abi.
Mm.
Yeah. Please share it. We have incidental cost, Abi.
Yes.
250,000.
How much is that?
250,000.
Plus 250, Abi.
Seven.
That's 17,750, Abi.
17,750. Yeah.
So let's
Yes.
cost of
Less
acquisition.
cost of the assets. Cost of acquisition.
Cost of acquisition is how much?
As you that will
13,500.
tell us now.
So the cost of acquisition will now be the value of the debt, not the value of the property.
Okay.
13,500. Right?
Well,
That voice is sounding more like Jennifer's voice, but no problem. Then we have
not Jenny.
capital gain.
Tax.
1 million.
450, Abi.
250. Yes.
So CGT at 10%.
Wasn't 5,000.
Any question?
Hello, sir.
Yes, ma'am.
I wasn't paying attention when you picked the 13.5. Why did you pick 13.5 and you said you should ignore 15?
Because that's the value of you exchange. Okay, let me just give you a logical example. You have a phone. The phone is 10,000 naira, and you're exchanging it for a calculator. Invariably, it means that the phone, the calculator will assume the value of the phone. So the cost of the calculator becomes the cost of the phone. Do you understand?
Yes, sir.
I'm owing you 13,500, but you sold an asset of 15,000 for 13,500. What is the value of the asset? How much did I buy the asset?
13,500.
13,500.
That's just it. So the third one, the company has a staff estate which comprises 5 buildings in its Abuja branch. In order to source for funds to construct a new staff in Kano, the company on August 12, 2021 sold one of its buildings in the Abuja estate for 110. The cost of acquisition of the 5 buildings in the estate was 250. The cost of acquisition of the building sold was 75 million, while the remaining buildings unsold were professionally valued at 240 million. The company also incurred for the purpose of the disposal of land 400,000 and what?
Jeez.
1.1 million. Let's just pick it like this. Okay, let's just joke a little bit. Is this a partial disposal or not?
Okay,
It's
it's
a
a
partial
partial
disposal.
Eh?
but
It's partial disposal.
Partial disposal, correct. Who is saying it's
We are
partial
not.
disposal, Jerry?
I'm the one.
So is anybody saying it's partial disposal too?
Yes, and we are not going to compute the cost of acquisition.
And you're not going to compute
That's
the cost
going
of
to.
acquisition.
we are not going to compute capital gains tax on it.
You won't even go far. You don't compute.
I won't understand. Because I say
Actually,
staff estate.
hello.
Yes, sir.
He sold one of its building for 110.
Yes.
But we are given the cost of the asset that was sold already. The examiner said that the cost of acquisition of 5 buildings in the estate was 250,000, right? But the cost
Yes.
of the one that was sold is
75
75,000.
So there's no need for this.
So there's no need for computation. Do you understand? So
A
it
over
means
A
that
plus B times
so
C.
it means that for the sake of this question, you ignore the
250
250,000.
Okay.
And then you also ignore the value unsold,
Value of
240,000.
the remaining buildings.
You
Okay.
ignore it. Do you understand?
So we only make use
Yes,
of the information of the one of the building.
Exactly.
that was sold.
It is partial disposal, but we don't need to compute the cost of acquisition. So it's even safe to say it's not partial disposal since we can determine the cost of acquisition.
Okay.
That.
That one
Yes.
for that one flat that was sold, right?
Exactly.
Wow. I can.
Sir, please let me ask you a question too.
Yes.
Because this thing confuses me. This building now was for the company staff estate.
Yeah.
Are we supposed to be computing capital gains on this building? Because the building is not for sale from the look of things.
But he later sold it. He sold one of its building.
In the estate.
But they told us the company has a staff estate.
But regardless of what the asset is, staff estate, staff building, staff motor, staff anything, did he sell it?
Yes.
Yes.
Right.
So if the building is for the company, like the building where they are using for production, office, and all of that, and after a while they sell it, we calculate capital gains on it.
Yes, if you ask to calculate the capital gains, please calculate capital gains.
Okay.
Sir, please, because I think
that question was like that we should confirm that we should calculate capital gains tax, if any. Like they felt there are some assets that they are not supposed to calculate capital gains tax.
Yes, because not all assets. It's not that not all assets. not all assets, how do I put it now? It's not because not all assets qualifies for capital gains, but we have some assets that were exempted from capital gain tax. If you met up our first lecture, assets for ecclesiastical activities, charity assets, etc. Those assets are not eligible for capital gain tax. Just refer to the first video, you get the full gist.
Okay,
please, before you move on, the dwelling of it, the dwelling, like the residents, the residential place where they live, like this estate now, the staff estates. I think it's not for profit making, so I think it should be exempted though, because like private residents are exempted from blah blah from CGT. I don't know if I get it.
Private
so I'm having that kind of thought that if I'm the one in the exam, I'll just write it is not it is not subjected to capital gain tax, so because
it does not qualify for capital gain tax.
Okay. And write it now.
Because there's a question I solved though. Let me remember the year. The director was living in the building and decided to sell part of the building. And they just told us that because the director had used the building, that the building does not qualify for capital gains.
Probably he reinvested the amount.
He did not reinvest the amount. I will get this thing and I'll send.
Okay.
I'll get the question because I solved it.
The company incurs for the purpose of disposal 400,000, right?
Yes.
Yes.
Our professional valuers. After this
110.
Right, so we have right?
Yes.
Then cost of acquisition. How much is it?
75,000.
75.
Capital gain tax. Capital gain. Permit me to round up the class here so that I can be able to get the video later. My system is a little low.
All right, sir. Thank you.
Yeah. So, but do you understand everything we've discussed tonight?
Yes, sir.
Yes, sir.
Any question? Hopefully we'll meet tomorrow, and then tomorrow, by the grace of God, I'll be solving with you the question on on the PIA, and then if time permits, after solving that question, I will go straight to the calculation part of double taxation treaty.
All right.
Thank you very much.
Thanks so much, boss.
You're welcome.
Thank you, sir.
Very much, sir.
You're welcome, sir.
Thank you, sir.
Thank